My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Not sure what to do? How about doing nothing? Unfortunately, people cannot resist doing nothing. So they trade and they trade and they trade on the same information until it's beaten to a pulp. And that's how I felt about the reaction to today's discouraging non-farm payroll report, where we had substantially fewer jobs created than we thought, even as the people who make these forecasts clearly had never heard of the Delta variant. If they'd known we were going through a severe COVID outbreak where people would rather stay safe at home than go into work, these weak employment numbers shouldn't have come as a surprise to anyone. Initially, traders liked the weakness because it meant that Jay Powell's been given a pass, right? He's getting right to avoid tightening into the face of the Delta variant. But then we gave up our gains with the Dow ultimately dipping 9 points, S&P declining 0.19%, but the Nasdaq actually losing 0.51%. Why? Because on further review, it seemed like the weak job numbers got confused with weak earnings, while oil prices took off once again, sending the flow of funds back into the energy stocks. Look, it's the same list I keep giving you. It's Devon, Pioneer, and Diamondback for growth, and Chevron for income. They all went nuts today again. Every time that oil goes up 50 cents, that list explodes. Still, this week we recovered from an early sell-off and finished strong enough to go into the heart of earnings season with a decent head of steam. So why don't we see what it has in store for us? Let's look at the week. All right, next Monday is Meme Madness Day because we get the box office results for No Time to Die, the latest Bond movie with the incredibly cool Brooklyn resident Daniel Craig. Since I live in Brooklyn, I'm the only person who thinks of him as Brooklyn's own. No one else cares at all about that, but I do. All right. Now, if the Bond movie is strong, the runners and gunners that these meme apes, their word not mine, will bid up AMC relentlessly. One thing's for certain, if Bond does well, AMC CEO Adam Aron will tweet to the limit about those box office numbers. He once had a tweet that got 7 million views. Adam's the kind of guy who's not shy about how his shareholders will make out like bandits if this trajectory continues, even though many money managers like to endlessly rail and bet against the man. Is AMC stock overvalued right now? By most traditional metrics, sure. But as I told Adam at my corporate governance conference last week, the stock is worth what people are willing to pay for it. And the answer is higher if the Bond box office is huge. Next up on Tuesday, we hear from a company that, it's only $30 billion, but listen to me, Fastenal is a proxy. It's a proxy for industrial growth because it supplies everything you need to build something. I always listen to the conference call. See, there's a dearth of news on Tuesday, barring new developments, of course, from Washington. So you should expect traders to go overboard, taking their cue from Fastenal. You should see these fast money guys. They say, well, not fast money, but like fast money. On Wednesday, it's almost impossible to determine how the market will react to J.P. Morgan's results. This is a well-run company that's in the habit of putting out terrific numbers. But will they be terrific enough to justify the run in the stock? Typically not. Yet there will be over-anxious traders who bid it up, right? They're usually reported between 6 and 7 in the morning, and then only to be bogged down by other traders who hate it. They find some line they don't think is good. I say if you haven't bought any J.P. Morgan by now, you can afford to wait. Let's see what happens. Now, BlackRock reports, too, and this huge asset gatherer will most likely have a monster quarter. I say that. I mean, the numbers will be considered much better than expected, even as I don't even know what the numbers are. Hey, but I don't know a soul who believes they won't be excellent. BlackRock is what I call a sainted stock. So if you're itching to buy something for a trade, this is the one. The reverence here is incredible. No matter what it says, it could literally put a blank number, and people would draft it in the first round. Next up, the airlines seem to be talking every day. It's like they can't shut up. When Delta reports on Wednesday morning, there'll still be people who will be surprised by how bullish they are about the prospects of return of international travel. As someone who's done quite a bit of flying since the pandemic peaked, I've seen the planes get more and more full. When you go to Europe, though, you're conscious that the EU's Green Pass, which you need to go anywhere because it shows you're vaccinated, is something we could desperately use over here, but we don't have political will. Delta Air would be doing a lot better if we had a vaccine passport policy to handle the Delta variant. But when I asked Commerce Secretary Gina Raimondo about it, she said it's not in the cards. America's just not as aggressive about ending this pandemic as Europe is. We were so far ahead of them. Now we're so far behind them. Well, of course, we take the whole live free or die ethos a little too literally. What else? Well, you've no doubt heard about our new investing club here on CNBC. Can you hold your phone up to that? Let me do that. You go like, can you see it over here? I mean, this is it. Is that? So if you want to, that's how I think, right? I mean, it's like, well, look, this is the rehearsal. When you catch the later one, it's going to be much stronger. If you want to see us in action, read our reports next week on Morgan Stanley and Wells Fargo. Those are two positions of my charitable trust when they report on Thursday morning. Club members will get unbiased, actionable analysis that Wall Street's just not going to give you. I've been doing this for a long time. Let me tell you, we give it to you in plain English how good or bad these quarters are. Even if we screwed up, we just say, we screwed up, we were looking for this, we didn't get it. No analyst will ever do that. And we give it to you in the time you need to make a considered decision. We pride ourselves on that, and we work for you, not the big institutions. We're not trying to curry favor with the people who run these companies. And that's curry, not the I have a Philadelphia accent. I'm betting Morgan Stanley's results will be amazing, and Wells Fargo's won't be as bad as it used to be. That's good news for both of them. The banks have had a big move here, but they're still well behind the broader market in terms of their price-to-earnings ratio, like a less extreme version of the oils. The financials have been hobbled, and now they're playing catch-up. If their stocks get hit next week, we're going to be buyers. I can tell you that. Also on Thursday, we get results from Bank of America and Citigroup. We know that Citi remains perennially cheap. I don't see that changing anytime soon. Bank of America could have a real earnings breakout, though, because long-term interest rates are going higher, and that's what they need to move the needle. Now, we hear from Domino's, too. Now, this is important because this has been a winner since we said buy it at 10 about a decade ago. I think it's going to beat the numbers once again. The Delta variant's made people hunker down again in their homes. Try the tomato pie, no cheese, banana, peppers. Okay, just try it. Hit the no cheese button and hit it a second time. There's a big boom for delivery-oriented pizza. They're also the guys who are doing the most about autonomous driving. How about Walgreens Boots Alliance? What a horrible stock. Now, you got to wonder if anything will ever move it up. However, the stock's been down so long that it kind of looks up to me. Any positive news could send it higher, although I can't imagine what that positive news can be. The people who run it, maybe they have an idea. If not, I'm going to be out here hammering the heck out of them. On Friday, Goldman Sachs reports. I expect a great one. Expenses under control. Wealth management strong. Fixed income pretty cool. People actually going back to work. Corporate finance very strong. Even M&A is limited by a government that suddenly cares about antitrust law, but it'll still do well. The good thing about Goldman stock is that it actually tracks the earnings. So if the quarter's as robust as I think it'll be, don't chase it. That's a fool's errand. For Investment Club members, we'll compare all the banks to make sure we have the right ones. And if we get it wrong, we will own our mistakes, as embarrassing as that is. I don't care. Finally, J.B. Hunt, the nation's third largest trucker, also reports on Friday. And we hope they can explain what the heck is going on with finding truck drivers. I mean, come on. Finding drivers become a nightmare. Hey, I got an idea. How about paying them more? We got a trucker shortage in America, often cured by paying people more. Well, maybe that's one reason why J.B. Hunt was downgraded from hold to sell by a major sell-side firm. Here's the bottom line. We're still at the tail end of a historically weak moment. We've got a lot more on that later in the show. So there's no need to be a hero next week unless we get a very steep sell-off based on exogenous shock that doesn't have much to do with the U.S. economy. Right now, though, a not-so-hot, maybe kind of cold jobs report is just right going to earnings, although I am expecting total case-by-case trading all next week. Loved. Joanna in Florida. Joanna.
Booyah, baby.
Booyah.
I've been a long-time listener of yours since the dot-com days. Anyway, I'm calling about Blackstone, BX. It's been a real darling of Wall Street for a really long time. In fact, if you look at a one-year chart, it hardly took a dip. It went up to 136 in September, and now it's down to 116. I bought it at 28 in 2010. And I have a lot of shares of it. Now, I want to know what's happening to it.
Well, I mean, these are the kinds of stocks that have been rolling over. A lot of people feel there's not going to be a lot more deals happening. A lot of other people feel that we're moving on to another part of the cycle. Here's my take. You have too much of it. You have some big gains. I need you to play with the house's money by taking some off the table. And you'll do that on Monday morning, please, because it sounds like you're a very nice person who likes me. I'm giving you that. Let's go to Stephen in New York. Stephen.
Jim, thanks for taking my call.
Oh, we're good to go. What's happening?
I'm calling on behalf of myself and your second biggest fan, my sister Lisa in St. Augustine, Florida.
Wow, leaped right over my two daughters, but that's okay. I mean, they have mixed emotions. Go ahead. Tell me about the show.
I love the new investment club, man. It's a game changer.
Thank you. The club is fun. I mean, we make love in the club. Not really. I do have his book, by the way. I mean, it's right here. Wasn't he the guy who did that? I mean, he is just okay. What's happening?
Your recommendation on a firm was magical.
Thank you.
My question is, with the recent partnership between CrowdStrike and UPath, what are the overall benefits going forward for CrowdStrike from the partnership?
I worry about CrowdStrike. I love George. I really do. Palo Alto Network may have the better model right now because I know CrowdStrike is cloud native, but I do think that if you buy Palo Alto right here, you got all bases covered besides the UiPath. I'm an Nikesh Arora fan, and that one has not come in at all. Why? No flies on PANW. Now I'd like to go to Susan in California. Please, Susan.
Hey, welcome to my favorite stock hero. I love you, man. And also, I'm calling from the land of the Giants and the Dodgers. Hey, I want to tell you something first about your Investors Club. When you first switched over, I thought, oh, shoot, another paying thing. And then the other day, I've been noticing there's no charge. So you announced on the air why you were doing that. And it actually makes my heart very excited.
Holy cow.
Your investors, new and old. So thank you, Jim, for that.
Thank you. I mean, look, it's time. I mean, I've reached an age where it's just time. Let's no commish. I don't want your money. I just want to try to give you the analysis that I see, and I don't curry anybody's favor because I don't play for dinner. Let's go to work.
Hey, so about 5 weeks ago, you talked about Upstart. I went and bought some. It took off. It's down a tiny bit. I was wondering, I know it's a niche stock. It's kind of unusual. What is your forecast for the future? Is this a stock
I need you to think about it like this, and thank you for those kind words. Everyone, thank you for the kind words about the club. I need you to think about it like this. I think this stock reminds me of Shopify when it was at 200, and it got to 400, and I said, you know what? That's a big win. No! There was much more. Upstart on every tip. Dave Gerard is amazing. This one is the way. So artificial intelligence loans, it's the way to go. How about these nice people like the club? Well, look, it was worth it. It is worth it. I'm just getting started. You don't even know what I got going down the line. All right, anyway, right now we're still in a seasonally weak period for the market. No need to be hero unless we get a very steep sell-off. I do think a not-so-hot, maybe even kind of cold jobs report's going to be just right for earnings. On Man tonight, supply chain troubles could threaten the holiday season. So how do we make sure all of our presents appear under the tree? Or, I'm talking to private player Flexport to hear more about the congestion at our ports and what it takes to fix it. Then for the last 21 years, late September through early October has been a tough time for the market. But now that we're bouncing back from a rough stretch, what's next? I'm going off charts to find out. And a few weeks ago, you stumped me on this Element Solutions. So I'm turning in my homework on the stock to see if this specialty chemicals company could create an interesting opportunity, and it just might. So why don't you stay with the Investing Club and stay with Cramer?
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.